All right, everyone. So my pitch today is on RedWire. I'm actually standing guard duty right now. I got called in this morning at 7 o'clock in the morning. So excuse me if I missed some stuff up. But yeah, so RedWire, otherwise known as RedWire Space, is a SPAC that completed its SPAC process earlier in the year when it merged with Genesis Park Acquisition Company. A lot of companies like Rocket Lab, Astra, Virgin Orbit, Firefly have gotten the attention of investors, but RedWire Space has remained a hidden gem for those looking to break into the space sector. So it's a space conglomerate company that was built through mergers and acquisitions over the past couple of years, looking to accelerate the infrastructure needed for human expansion into space. So right now, the space market is estimated to be about 420 billion, but according to some estimates, could be over 2 trillion by 2040. So it's headquartered in Jacksonville, Florida, and it was formed by A&E Industrial Partners that it acquired 2 space infrastructure companies. And most recently, it added an 8th company to its portfolio, TechShot, which is a biotech company that's looking to develop payloads for microgravity research in space. So it was valued at $750 million as part of its SPAC deal. And at its closing price of Friday, market cap was $470 million. Right now, it has a projected revenue of $163 million for this year. So based upon that revenue and its current stock trading prices, it's traded on a 3.1 multiple. And by 2025, it's expected to be generating approximately $1.4 billion in revenue. And as of 2021, there's $280 million in contract backlogs and over $220 million in pending bids out there on the market right now. So contrary to a lot of other SPACs in the market, RedWire is currently cash flow positive, which is different than a lot of these other EV companies that are headed to market that still don't even have a product out there yet. So among the accomplishments RDW has out there, it was the first additive manufacturing technology to operate in microgravity. It's provided the navigation systems for the Lucy mission to the moon and Mars and Jupiter, as well as critical equipment to the 2020 Mars Perseverance mission. And although not confirmed yet, there are rumors that RedWire is working with Amazon as part of their Project Kuiper plan, which is a direct competition to SpaceX's low Earth orbit satellites, where RedWire would be providing infrastructure to help support that. So current customers for RedWire include Air Force, Space Force, Boeing, NASA, JPL, and Blue Origin. And currently their COO sits on the NASA Advisory Council of Regulatory and Policy Committee. So they have over 100 patents and intellectual property out there right now in the space sector. And I think they're one of the solid picks. And if I wasn't convincing enough, I got a guest pitcher who wants to help me out with this real quick. So if you guys would just want to see this.
RedWire Space, the most undervalued space stock, is going to the moon. RedWire, please give us that Amazon news. And you know what happens. We are going to the island to party with the Island Boys. Let's go.
So that's all I got. If you're a fan of the Island Boys, you know who they are, and they speak facts. So that's all I got for you guys.
So what are the bull cases for RedWire? How do you see its competition like SpaceX?
So, there's definitely, you see a lot of these other companies that are coming to market right now, Planet Labs, a lot of satellite, a lot of rocket launch. They're really commercializing the space. For a long time, it's just been the government that's focusing on space. And now with these additional companies, and there's a lot of publicity about taking people to space. And, Elon Musk has been promoting going to space and getting people hyped up about it. I think that's really driving a lot of investor attention to the space marketplace. And this is one of the, the only companies out there that's actually cash flow positive. So as other companies look to expand, this company, along with all of its ones it's been buying, provides services to all these other satellite companies, rocket launch companies. So it's basically setting itself up to be an infrastructure player that can get on in any aspect of rocket launch, satellite, NASA missions, anything like that.
What do you feel like are some of the technological advancements or advantages that RedWire has over a SpaceX or a Rocket Labs?
Yeah, so I think one of the main aspects of it is that they look for companies that are specifically targeted for what their verticals and horizontals want to look for. So they have companies in their portfolio who have been in the business for over 50 years, who have been part of the entire space process leading up to the NASA missions, JPL facilities. They've had companies that work hand in hand with them. So having that subject matter expert knowledge and being able to provide those additional services just based in addition to like SpaceX or Blue Origin, who are solely focused on one mission, allows them to be that value added service to that And like one of the main ones they're looking at is the solar arrays. So allowing these, vehicles in space to have additional power is something that's going to be revolutionary to the way we travel in space, because it allows power to be generated in space, which is something that people are still obviously trying to figure out on how to get us to the next planetary phase.
Yeah, I have a question in two parts. First is like you said, they are a leading consolidator. So how are they going to grow in the future? Is it by consolidation or innovation? And the second part to it, since they are a consolidator, what is the return on capital that they are generating right now? And what's the debt to EBITDA leverage criteria they have for long-term investing? Because I would think they wouldn't be doing more share issuances in the future. They'll be probably using that.
Yeah. So initially, what my research has led me is that the whole reason for this company going public via SPAC is to raise money to continue consolidating and gaining that foothold in the space infrastructure ecosystem. So they already have 7 companies that they have bought, and this one I mentioned earlier, TechShot, is that the 8th company in their portfolio, and they're going to look to continue expanding on that until they can be part of all these different processes to get us where we need to be in space. So those are really the main focal points on what they're trying to do. And I mean, they're looking to 10x what they're doing right now by 2025. That 1.4 billion is, it's definitely a stretch for what they're doing right now. But the fact that they're targeting these companies that fit their plan for vertical and horizontal integration as part of the infrastructure plan really is going to pay off. As we get into space, they're going to be needing all of these services in space: 3D printing, fiber optic manufacturing, solar array panel, and then one of their newest initiatives they're working on is the DART process, which is if you're into the what's that movie with Bruce Willis in the asteroid, they're actually in a program trying to figure out the best way that if something were to happen in the future, how to build out the infrastructure to be able to direct an asteroid away from Earth. So
yeah, the follow-up is basically, since they are a consolidator, I want to know what return on capital they are generating. And I'm assuming they're going to use debt in future to consolidate. They have a little bit of cash, but is there any criteria that they have told us as part of their capital allocation process here?
Yeah, so that's actually, I'm glad you brought that point up, because we are still waiting to hear their first earnings report as a public company. So that's something else I was going to mention, but was running out of time. So in the third quarter earnings report, it had been delayed. It was originally scheduled for November 10th. And the management was notified that there was a potential accounting issue with one of the business subunits. So at that point, the management team notified their audit board and the SEC, and they're currently waiting as a result of that so they can release their part of the earnings report and tell us about their future plans. And that's one of the bare points of this is that a lot of SPACs like Ride, Momentous, Nikola have gotten that increased scrutiny because they are SPACs. So that's one of the main bare points to RDWs. We're waiting to hear that first earnings report and what their plan is for the future, rather than just making announcements on, they're adding companies, they got all these projects and deals, but actually the financials and their projections moving forward.
So what's the return potential in, let's say, like 5 to 10 years?
Yeah, so I would say, if it's still, obviously it's trading at a very low, multiple right now, 3.1. So it's looking to 10x its revenue by then. So, I mean, on the conservative side, I mean, I would say at least it's, 10 times